Thank you very much, John. Jim, let's start first off, not only with the fact that you had an $800 million impact from tariffs in the second quarter, but you've trimmed your full year guidance. You're expecting a $2 billion impact full year. But is this the worst of the impact in terms of tariffs that you expect for the full year?
Yes, I think we had a great quarter, first of all, and thank you, Phil, for having me on the show. And we increased our guidance for the company based on our underlying business. We did increase our guidance on the net tariff impact, but we are having very productive conversations with the administration on how to get back into a reasonable range. So as the most American company, we're not disadvantaged as these bilateral trade deals get done.
Well, you've had conversations, Jim, but let's also be honest. You guys are still at a disadvantage in terms of when I've talked with the people in your company and people who have studied the numbers. 15% tariff for Japan doesn't leave you guys on a level playing field, at least in your opinion, versus the Japanese automakers when they're importing vehicles here to the United States. Have you said that to Mr. Trump?
Oh, sure. I mean, we have all the numbers, $5,000, $6,000, depending on which vehicle you look at. You know, labor, currency, a lot of advantages there. But the bottom line is Ford is not competing in a lot of those segments. You know, if you want to make money in the U.S. market for a two-row crossover, you have to produce it outside the U.S. That's not where our capital is going. Look at our earnings. Ford Pro had a great quarter. We now continue to decrease our costs 4 quarters in a row now. And really, the drivers of Ford's profitability and growth are not in those generic segments with imported products. Now, we definitely want to reduce our tariff bill because we have a lot of layers of tariffs on imported parts. We make about 80% of our vehicles, but we still import parts from all over the world. And that's the opportunity to work with the administration. And they're very committed to supporting companies like Ford that have committed to the U.S. manufacturing base. And we'll see how this all works out. We'll let everyone know how it comes out. But so far, I think we're seeing progress.
Jim, speaking of cost, recalls continue to be an issue for you guys. You have a $570 million charge in the second quarter related to recalls. And you know the headlines that have been out there that it seems to be accelerating, not decreasing in terms of the number of recall actions that are out there. What do you say to investors who look at this and say, I'm still troubled by the problems that Ford has when it comes to recalls?
Well, I'm glad you brought it up. First of all, our initial quality is really totally competitive now. We were the most awarded company and brand in IQS, J.D. Power's initial quality. Our launch quality is now better than competition. The recalls that we had are vehicles engineered from 2015 and 16, and a lot of software OTAs that are not that expensive. I wouldn't correlate for investors the number of recalls and cost. Actually, our base coverages make up 60% of our warranty costs, and those go down as we drive these quality improvements into our product. But, you know, the products are out in the market. And, you know, I would expect recalls potentially go up at Ford because we want to protect the customers. We have more inspectors, more engineers looking at our quality issues in the field. These are vehicles that are 6 or 7 years old, and we want to do what's right for the customer. It's the longest lagging metric, recalls, for quality improvements. This will be the last one that turns. Warranty coverages are already going down, and that's something that we're really proud of.
Hi, Jim. It's John Fort. Great to have you here on Overtime Before the Call. Question about tariffs and deals and the upside for you. What are these trade deals that the Trump administration is doing going to do for Ford's EV competitiveness globally? And what, if anything, needs to happen in these negotiations the administration's in with China?
Well, yes, I think, first of all, you know, the EU and the Japan trade agreement are pretty material for our industry. For a company like Ford, who makes most of its products in the U.S., you know, that's a $5,000, $6,000 benefit. And so what we're working with the administration is the layering of these tariffs. The auto industry has its own tariffs, and we import parts. Those are subject to reciprocal tariff and fentanyl tariffs and the 301 from China. So what we're trying to do is try to simplify that and decrease the burden on the company. to get more competitive with those imported brands. So I would say so far we've had good conversations. Nothing material to report today, but I'm optimistic that the Trump administration is completely committed to companies like Ford.